I want to welcome everybody this evening. My name is Don Kaufman. I'm going to be introducing here momentarily Matt Williamson, and this is a TheoTrade presentation. Tonight, Matt is going to be discussing, along with me, growing a small account. As I said momentarily ago, I was introducing myself. As I said, my name is Don Kaufman. I have been in the industry for quite some years, and I'm going to throw up a risk disclosure as we're doing this. Been in the industry quite some years. I started trading in the late 90s. We co-founded TheoTrade after I left the brokerage industry. The brokerage industry was a very vast portion of my career. It was one of the originals at a small startup firm called Thinkorswim. We eventually took the company public in 2007. We're acquired by TD Ameritrade. I then went on to run education for TD Ameritrade. And when I was there, about 5 years ago is when I finally exited TD Ameritrade. We had about 7 million clientele. And I gave you a little background story on myself because you're going to see how Matt fits into this momentarily. So before I go any further, there's a risk disclosure. I'm not a financial advisor nor a broker-dealer. None of us here at TheoTrade happen to be. The reason I mention that is because, again, I spent about 15 years in the brokerage world. Next, we have a copyright disclaimer. This is ours. This is not yours. Okay. The other thing I want you guys to know, and I always mention this, listen, if you need to get a hold of myself, if you need to get a hold of Matt Williamson after this evening, right here, just support@theotrade.com. And please, I encourage people, email. It's all right. And in the heading of the email, say, hey, ship this over to Don Kaufman. Hey, ship this over to Matt Williamson. You can give us a call anytime. Again, our main offices are located right here in Scottsdale, Arizona. All right, kind of moving forward here. So Matt, are you already grabbing this? Give me just a second over here. Make sure we got that.
Yep, grab
okay.
it.
Yeah, no, I was just going to go through a little housekeeping. Okay, so a little bit of housekeeping in here, and if you want to back up for just a second there, Matt.
There we go.
Okay.
Yep.
Yeah. So a couple things right up front. And again, I'm going to introduce Matt here momentarily. So you have to understand that tonight, Matt's going to go pretty deep, and it's one of the reasons I'm kind of introducing him. One of the things I also want to introduce, he's going to throw some pretty, out there concepts at you. Listen, this skill set, pay attention tonight. I always say shut the door, turn off Skype, chat, Facebook, phones on silent mode, kids out, children. Okay, I like this one. We should put a little arrow through the child over there, where it's no children. Listen, you took the time to be here. What Matt's going to be discussing tonight is extremely important. Now, I'm going to tell you a little bit about TheoTrade. TheoTrade, again, as I said, I exited TD Ameritrade about 5 years ago and was immediately approached after exiting TD Ameritrade to start an education company. And they said, but you can't do it under a brokerage house because there's so many regulations and so forth. So ultimately, we built TheoTrade. And TheoTrade now has 7 full-time instructors, obviously Matt Williamson being one of them. But those instructors, everybody here at TheoTrade has a minimum of 15 years, okay, of trade experience. And it's of critical importance to me when we talk about like TheoTrade. Everybody here, okay, they're experienced, all right, traders. And we've taken these experienced traders, all right, and we have brought them into the TheoTrade fold, and we allow you to, view their screens. And that's exactly what we're going to be doing tonight. So a lot of what we're going to be doing tonight is you're going to be viewing not just Matt taking you through. Matt's going to take you through trades, all of his live trades. Now, for a little background specifically on Matt, here at TheoTrade, we were shopping around a few years back for new instructors. Obviously, one of the key points here at TheoTrade, they have to have a minimum of 15 years of experience, which I'll tell you what, in the industry, okay, 15 years means a lot. So I had left, again, TD Ameritrade. I'm still very close to a lot of individuals there. I was on an executive management team there for a lot of years. So I made a couple of phone calls, and I've told Matt this story a couple times, made a couple of phone calls to a few executives, specifically in the risk division of TD Ameritrade. And I said, hey, listen, gentlemen, okay, on this particular phone call. So, gentlemen, I want to know of a trader, okay, that is extraordinarily active, okay, profitable, degrees of success. And I knew, of course, the risk management team at TD Ameritrade, they keep an eye on anybody that trades extraordinarily large. Doesn't matter, okay, whether you're making money, whether you're not making money, they keep an eye on everybody that trades big. And all of the individuals that I called kept coming up with one name, and it was actually Matt. That's so. By the way, we're supposed to keep that on the down low. Like, how did you find Matt? Well, I called the risk manager at TD Ameritrade, who's known the guy for 23 years, and he gave me Matt's name. But Matt has been a very consistent trader, and us vetting him was as easy as calling up the risk manager. The risk manager obviously looks at the account on a day-to-day basis, and Matt, that's. I contacted Matt literally out of the blue. I think the first time I talked to you, you're driving a car. You're like, I have no idea who this guy is, but he seems to know everything about me. That's a little background story on there. With that, I was much to my surprise that Matt resides in Birmingham, Alabama. You spent 10 years in New York. You know what the world is about. Let's introduce again Matt Williamson. Matt is going to take you through a tremendous amount of content this evening. So get ready, strap in. Matt, take it away.
All right, thanks, Don. That's quite an intro to live up to. All right, so yeah, like Don mentioned, I'm going to take you through a lot of things. And first and foremost, I want to just jump in and say right away that this is why you are here. So I'm going to tell you exactly what you're going to learn, or what I hope that you learn by the end of tonight's webinar. So I want you to walk away with the following. I want you to know how professionals trade compared to how retail traders trade. And I can assure you it is very different. And we're going to talk about some of those differences. All right, I want you to know how to find, quantify, and exploit inefficiencies in the marketplace. You always hear, especially on the retail side, I think you hear a lot about, there's no more inefficiency in the marketplace. It's all been squashed. But it's totally still there. So I want you to know how to find it, how to quantify it, and how to exploit it. All right, and then how to use those inefficiencies in conjunction with strategy to grow a small account with consistency. So it's not just about knowing how to spot them and how to find them. If you use the right strategy, you can actually exploit them and leverage the exploit, so to speak. And then lastly, how to trade in a way that does not involve staring at a trading screen all day long. So I always like to ask this question, how much time do you guys actually spend staring at the screen on a given day? If you're an active trader, if you consider yourself a trader, are you spending 3 hours in front of the screen? You spending a couple hours in front of the screen? I've met people that spend, the whole trading day in front of the screen, and they're still kind of scratching their head, not making a profit, breaking even. And it's just a really frustrating, experience to spend that much time on something and not really have anything to show for it. So unless I'm not telling. So yeah, I'm going to show you a way to do it, how to trade in a way that doesn't involve sitting in front of your screen all day. Okay, and as a gift to you, if you hang with me to the end of the webinar tonight, the end of this webcast, I'm going to give you a trade tracker tool. This is something I built specifically to help out traders. So I'll show you a little screenshot of it. It's basically a tool that will help you quantify your results. One of the things I preach all the time on TheoTrade is that you have to know how you're doing, right? If you don't know how you're doing, how are you going to figure out how to improve that? How are you even going to see where you are? So knowing how you're doing overall and being able to put some numbers to your actual trades is very important. Okay, so here's what it looks like. It's a quick little tool. Again, you put your entry in here. It's designed for multiple exits. And then once you start tallying those things up, it's going to spit out a bunch of stats on your trades. All right, so it's a cool tool. Hang with me till the end of the session this evening. We're going to give it to you for free. So that's super cool. All right, so Don already made the introduction here, but just a few points to go over. I am not 12 years old. I promise I'm not 12. I'm 37. I'm a young 37. I'm 37, but I'm 12 at heart. So I'm here because I have been exactly where many of you have been. I put the title here, I bought 837 trading courses. Obviously, that's a little bit of an exaggeration. But I probably bought, I don't know, I feel like I bought at least 100 trading courses. And you know, I had to buy all that stuff before I really learned to trade. And you know, some of it was helpful, some of it wasn't. It's kind of the nature of these things. But just to give a little background, I remember doing a paper trading project in second grade. So I had a cool second grade program apparently. And you know, at that point, I kind of I fell in like with the markets. You know, you can't fall in love with markets at 8. But then I did started learning to trade seriously right after the 2008 crash, and then kind of really fell in love with things at that point. So you know, I'm not from the institutional side of things. I don't have a background in market making. You know, I didn't come from a broker dealer or any of that kind of stuff. I actually came from the retail trading world. So again, you know, when I say I've been in your shoes, I mean it. You know, that's the background I come from. I did teach for many years in an unrelated field. So I have a teaching background as well as a retail trading background, which I think is cool. You know, you don't see too many people with both of those sides of things. So I taught professionally for 15 years and trade professionally. So it seemed only natural to sort of put those two things together into something that you know, that I enjoy doing quite a lot. And then I've been down the road of shiny objects, right? So you know, if you're in the retail trading world, there's always someone you know, trying to tell you that this is the next big thing, this is the indicator you need, this is the trade you need, you know, this is the thing that's going to make you successful. And you know, I've seen almost every one that people have, and at this point, I can just spot the overhyped garbage a mile away these days. And you know, just to kind of a nod to Don, you know, there's a lot of people out there that make a lot of claims, and Don is, I think, the only one I've met that can actually back it up with knowledge and experience. It's super cool. So I feel honored to work with Don. And lastly, here on the slide, I've made the mistakes that you guys will invariably, absolutely make. And you know, when you look for someone that can help you learn how to trade, one of the biggest value adds is someone that can help you not screw up. All right, mistakes are extraordinarily costly in this business. I've been on the wrong side of them several times, and you know, those things are hard to talk about and they're hard to deal with when they happen. But you know, you can use that as a teaching experience, and you know, if I can save you from just one major bomb in the market, you know, that could save you a tremendous amount of money. All right, so that's kind of what I like to shoot for. All right, so here's me at our annual conference there in Scottsdale. Just wanted to throw a picture up there. It's cool. I get to do this every year at Scottsdale and teach live in front of lots of people. So that's always kind of fun. There's me right there. All right, so I'm going to jump right in here, and we're gonna start talking about things that you need to do to be successful, and then we're going to go into specific strategy and how to, you know, exploit those inefficiencies we mentioned earlier. All right, so the failure formula, I want to start out with this part. So there's exactly 3 things you need to do in order to experience pain and suffering as a trader. All right, the first thing is to trade without an edge. I always call this trading blind. This is like throwing darts at a dartboard and hoping you hit the bullseye every now and again, okay? And then the second thing is trading without a consistent strategy, right? So even if you trade with some kind of edge, if you don't have a consistent strategy that you can execute day in, day out, that's also going to cause you some pain and some suffering. And the last thing is discipline. All right, so a lot of people are missing this component here and have very limited or poor or no risk management whatsoever. Anyone here guilty of any of these things? Nobody, right? I can tell you I was extremely guilty of all of them, right? So for a long time, you know, during that process where I was taking trading classes, learning this, learning that, you know, I would learn some strategies, I would learn some trades, I would learn some things about the market, but I can't recall a single class or a single person ever telling me what their edge was, right? It was do this, do that, do this, do that, but there was no one talking about what their edge was, like not a single person saying this is why we're able to make money in the market. This is what we're doing. This is what no one else is seeing, and this is how we're making money. And I wasn't consistent with strategy for years, and you know, the discipline side of things, like I said, I've lost some very serious money due to lack of or limited risk management. That's how you learn that lesson. And again, if I can help you learn that lesson without losing that money, then I'll consider my job, you know, well done at that point. Okay, so let's move on to the success formula. Obviously, it is basically the opposite of the failure formula. All right, so the 3 things you need are repeatable, logical, permanent edge. When I say repeatable and logical, that means edge that doesn't go away. right? We're going to talk about that more in a few minutes. All right, you need a strategy that can properly exploit the edge, right? So when you find it, you got to have something you can throw at it that's going to properly exploit it. A good example here, the HFT firms, it's high frequency trading firms, someone at some point noticed that prices on one exchange were not the same as prices on another exchange. And, it might have been by a penny, it might have been a fraction of a penny, and someone came in and says, hey, let's trade them against each other. And that was how the HFT stuff started, right? So just because of the, data lag or whatever, they were able to come in there and exploit that. And at this point, it's, the edge is pretty much gone, right? And then the last thing you need is discipline to manage that risk and allocate your capital properly to avoid, big blowups. Okay. So I would like to put this slide in here. Are you almost there? So you need all three, and only if you have all three will you find the little happy place that is success in trading there in the middle rather. So take a minute to think, and just tell me. Feel free to chat in. Which one are you missing? Are you missing one of them? Are you missing two of them? Are you missing all three of them? Typically when I talk to people, they're missing two out of the three. All right. Occasionally I'll talk to someone that's only missing one out of the three, but I can tell you if you have edge and strategy, most people are missing the edge part. Right? A lot of people have the strategy, some of them have the discipline, almost no one has the edge. Right? So if you have the strategy and the discipline, what you're going to wind up with is a lot of confusion, right? Because your trades will work sometimes. You have a strategy, you have some discipline, you're throwing the right amount of money at stuff, you've got a strategy, but there's no edge. Right, so you're just, you're almost just taking a shot every time, and you'll win some and you'll lose some, but at the end of the day, you're probably not making any money and you're not sure why, right? Okay, and then some people have strategy and some edge. That one's really rare, but that one's really dangerous. Like at that point, you have something you're exploiting, you have a strategy to do it with, but your risk management is toast. That's the thing that will blow up an account right there. If you have edge and strategy but no discipline. If you happen to have discipline and edge, this one's kind of a rare combo. You're going to be frustrated because you see the edge, you have the discipline to allocate properly, but you don't have the strategy that's given it to you. Okay. All right. So hopefully we can take you to a place where you've got all three, but it's tricky. So I really would encourage you guys to reflect for a minute and think about which piece you are missing. Again, for most people, it's the edge piece. Okay. For occasionally, it's the strategy or the discipline, but I found for the most part, it's usually edge. Okay, so let's talk for just a minute about edge. I'm going to focus on this a lot in the presentation here, and I talk about it a lot on TheoTrade. Very, very important. So edge is a structural inefficiency in the market. It's something that is inefficient, right? There are inefficiencies all over the place in the market. Maybe all over the place is a little bit of an exaggeration, but there are definitely structural inefficiencies. I just mentioned the HFT thing. That was a structural inefficiency. Right, the exchanges couldn't price things in real time, or couldn't get the pricing fast enough, and someone came in and killed it. Right, someone came in and made a ton of money, arbitraging those things against each other. If you don't know, an arbitrage is basically a risk-free trade. So if I can buy Nike on X exchange at $97 and then sell it on this other exchange at exactly the same time for $97.01, that's a risk-free arbitrage trade, and that's what the HFT folks found. They found a structural inefficiency in the marketplace. All right, it's there for some reason or another, and it's there to stay. All right, in the HFT example, they pretty much, they hit it with all the capital they could, and now it's gone. All right, so your job is to find some edge and find it before you place any of your trades. All right, if you're placing trades without having something you're taking advantage of, again, it's just like taking a shot every time. You're taking a shot in the dark, trying to hit something. Okay. Next one is strategy, right? We talked about this. Some of you guys already have strategy. So, when we talk strategy, for the most part, when I talk to traders, it's always about direction. Which way is the stock going to move? And that's how the strategy is kind of built from there. And ultimately, there's only two ways it can move, right? It can move up or down. And, I guess you could make the argument that it can go nowhere. But during that time, unless it's frozen or something, it's going to move up and down, right? And just a fun fact here, there are exactly 1 million ways to place a stop loss and profit target within a 10-point range, right? So if you take a trade on Apple, for example, and you think it's going to move up or down 10 points, there's literally 1 million different combinations of stop loss profit targets within that range, 1 million. And which one of those you choose will have a pretty big effect on your account balance. So you've got to pick the right strategy, right? And whether that's a stop loss, profit taking kind of thing is is up to you. But for me, I'm going to show you a different way to think about strategy. Okay. And then last, discipline. So you're going to manage your risk first and foremost. That's what you got to do. You got to manage your risk. If you don't manage risk, you will blow up. You will lose your account at some point or another. You have to manage risk. All right. So every dollar you lose today, because of compounding, you're losing thousands of potential dollars later. You have to manage risk. You have to manage it and you have to minimize it. Of the 3 things we have up there, right? Edge, strategy, and discipline. Which one of those 3 things do we think is most important? All right, go ahead and chat and tell me which one you think is most important. All right, again, we have the edge, we have the strategy, and we have the discipline. And I see a couple people throwing in strategy, discipline, risk, discipline, 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 discipline. You guys got it. I must have driven the point home. All 3 are very important, but discipline is the most important. Again, without that discipline, you're not going to have a trading account, period. Okay, so you got to have discipline. Okay, core strategy and trade logic. So here's where we actually get into some of the strategy and I show you what we're going to be doing. Okay, so I'm going to show you a real world application of how to put these 3 things into practice. All right, so first we need to establish some edge. I'm just going to tell you where some edge is, right? A lot of people spend a lot of time looking for it. I'm going to tell you a very easy place to find it. All right, so if you've ever looked at a chart of Apple, I'm sure probably at least a few of you looked at a chart of Apple today, given the fact that they reported earnings after the bell. If you've ever looked at a long-term chart of Apple, you will very quickly notice that it tends to move up or that it tends to move down. It's a very bullish stock for a very long time. So based on that knowledge that it moves up more than it moves down, can we set up a trade on that? Can we trade based on that knowledge alone? And my comment is absolutely, right? We could get long, just get long the stock. All right, but if we want to have confidence in getting long the stock, despite just eyeballing the chart, then we can get a little bit more quantitative. Now that's kind of a scary word, quantitative. What does that mean? Right? You hear about quant traders, you hear about these people in these giant rooms with huge machines crunching data on supercomputers. And sure, there's those people out there, but all I mean with this is that we're going to use some numbers to establish the fact that we have edge. Quantitative just means numbers based. So we're going to try to get numbers based with our hunch that we can go long on Apple. Okay, and I've thrown an example in here. Let's say that we will go long after a cross of a bullish, after a bullish cross of a moving average, right? It's a crossover, bullish crossover, right? You guys have traded on those. We've seen those before. It just means when the price closes above or below a moving average, we assume that we're going to get continuation in that direction. Okay, but we can actually measure that with precision. We can go back and look over some period of time and say, well, how many times, if we got that bullish cross of that moving average, how many times did we come out a winner, right? And so I built a tool that will show me exactly how many times we came out a winner. All right, so if we run a test with this tool and the stats suggest that we should go long. All right, so here's our little breakdown over here. So we get the 200 simple moving average, we crossed above it. And by the way, our tool can run any moving average you want, exponential or simple. So if you want to check a 37-day exponential moving average, you can do that with this tool. All right, and it's going to spit out a couple of things. It's going to spit out an expectancy on your trade, which is how much you can expect to win or lose on every trade on average. It's not, it's not a guaranteed per trade, obviously. It's just an average number. And it's going to say, hey, based on the fact that we're crossing above the moving average, we should expect to take a bullish trade. And the suggested bias tells us that, hey, it's right. We shouldn't reverse the trade. We should take the bullish trade in this case. All right. And it's giving us about 4.3 expectancy rather, which is pretty good. All right. And in this case, it's a 14-day holding period. And those are the stats on Apple. Right, we have 29 occurrences, which is not shown in the screenshot. So we've got a decent little medium confidence level with about 30 data points over the past 20 years. Okay, you can also look down here, see the win rate. So if you put the trade on, about 80% of the time, you're going to win that trade. All right, that's pretty good. Those are pretty good stats. Okay, if you want more data, this is me. This is not you. This is me. I want all the data. All right, if you want more data, we have more data. All right, we can also look at the average move. Ignore the short strikes for now. We can look at the average move and see that Apple moved on average 6.8% to the upside. That's a pretty solid trade. It's a big move, right? I do want to point out though that does include what we call fat tails. Those are kind of outlier trades. So, if Apple moves 400% or something, it would skew the average a little bit. All right. So based on that though, we could create a trade that targets 6.8% movement. We can get really, kind of in there and see if we can actually put trades together that have a specific target. We can know what our likelihood is. We can know what our win rate is. We can know what our expectancy is. Now we've got all kinds of data, right? And if you want more granularity, again, this is me, we also have some distribution graphs. We can look and see, which trades landed where, basically, in the continuum, okay? Once we have the edge, and the edge is historical data, right? We know what happened historically. We don't know exactly what's going to happen in the future, but we can actually make a pretty good prediction on that as well. We're going to get to that in a minute. Okay, but now we have some historical data that we can at least look at as as a potential edge. Okay, once we have that, we choose a strategy. And I hear you all yelling already. This part's easy. You just go long, man. That's all you do. You go long. You got a 4% expectancy. Just get long. All right, but my rebuttal to that is, okay, you're going to get long. Where do you put your stop? What ratio do you do? Risk 1 to make 2? Do you do risk 2 to make 4? Risk. I guess that's the same as 1 and 2, isn't it? You could risk 2 to make 3. What do we do with that ratio? Do we use wide stops? Do we use narrow stops? Everyone always tells me to cut the losers and let the winners run, but how far should they run? There's so many questions to answer with the strategy portion. Okay, so let me ask this question to everyone. Have you ever been stopped out of a trade and then watched it reverse and go your way? All right, I can tell you I have about 1,000 times, more than that, I think, probably. It's a conservative estimate, and it's extremely frustrating, right? Like you got the trade right, but you got stopped out of it, right? Anyone ever have that happen? Am I alone? Is everyone else trading better than me? It's super frustrating though, and the solution to that problem is that we need a more flexible stop, right? We need something that will not get us stopped out of the trade that can still give us, potential to win the trade. All right, so enter the O word, right? Everyone always gets scared on this slide. So what we need to do to have a flexible stop that can let us stay in the trade for a long time without getting stopped out and still maintaining our profit potential, we need to use an option. Okay, and I know that's scary. Anybody in here traded options before? Any options traders? Any options veterans in the room today? Anyone never traded an option before? What it is, it gives us a tool that offers complete control over our risk and reward. We can dial in our risk and reward to any degree we want. We can risk 1 to make 40. We can risk 40 to make 1, right? We can flip it around any way you want, and the ratios are completely within your control. Okay, and I've I put the tool and the wrench in here. I've smashed my fingers many times and still haven't quite learned to use a wrench. In fact, the other day I was cutting out a tree in my backyard. I had it pretty much dug up down to the stump, and I was trying to use a shovel to get the tree out, and it wasn't quite working. And what I should have probably done was go get a better tool, but instead I thought, you know what I'll do? I'll deadlift the rest of this tree out of the ground. And now my back is really sore. It didn't work. So use the right tool. In this case, we need an option, right? Using a stock is less efficient, and you're going to get stopped out a lot, and that's frustrating, and you're going to leave money on the table, okay? So why options? And I see a couple people mentioned in here that they've used in-out spreads. That's one of Don's hallmark trades. So this part of the presentation is going to be a little similar to the in-out spread while I just explain getting stopped out and some probability. So hang with me. All right, so options give us a hard stop, right? It's a floor on our losses, okay? And then we determine, right? So we can't lose more than we determine at the outset. If we say we're going to risk $100, that's all we can lose if we buy an option for $100, okay? And the cool thing is that this cannot be triggered early. We cannot get stopped out of this trade early. It's just not going to happen. There's no way that it can happen. Due to the structure of an option, how it works, it's not going to happen. Okay, so let's say you put an option on, you buy an option, and your stock trades 80 points below your stop, right? You were originally, you're risking 1 to make 2, stock trades down 80 points. Pretty much a nightmare scenario for any kind of stock trader. All right, but for us, we didn't even lose any sleep. It was fine. Let's say it comes back and rallies 20 points above your stop. guess what? We just won the trade. We made our 20 points and we didn't get stopped out, right? Even though that stock ripped through the stop and then some, we didn't get stopped out because of the option. If you're trading a stock, you got stopped out really badly. All right. If you're trading a stock and it gaps down 30 points, guess what? You just lost 30 points. Right? If you have an option, you might have lost 1. You might have lost 2. You might have lost half a point, depending on where you bought it. So extremely, extremely great tool for managing risk. And a lot of people have options horror stories floating around in their family somewhere. I have an uncle that lost $8 million trading options. And yeah, there's horror stories floating around. Usually those stories involve the short side of options. So selling options rather than buying them. And then the other portion of those horror stories involve extremely irresponsible allocation. All right, so we're going to address allocation for sure, and then we're only going to be on the long side of options. Okay, so we can avoid those doomsday scenarios. Okay, one more argument rather for options. I've already said it gives us 100% control over risk and reward, so we can dial it in to whatever degree we want. So if you're used to trading 1 to make 1, risking 1 to make 1, or risking 1 to make 2, or whatever your system is, you can dial it in exactly with options. Whereas with stock, again, you're subject to stops, you're subject to gaps. I always like to throw this in here. The most common accepted target in stock trading is the risk 1 to make 2, sometimes risk 1 to make 3. But in fact, what you see more often is risk 100 to make 3. Right? You buy a stock, it goes against you, it goes against you, it goes against you all year. All of a sudden, you're down 50% on the thing, and you just hold it for 9 years, and eventually you get back to break even, you take the thing off. So it turns out to be a risk 100 to make 3 kind of trade. It's the old, I had a trade that turned into an investment that turned into a tax write-off trade. Right? And everybody has those. I have them too. I think I still have one sitting in my account somewhere that went from, I don't know, whatever it was, down to like it's worth an eighth of a penny or something now. So I'm not castigating anyone here for doing that. I've certainly done it myself. But the option gives us 100% control over risk and reward from the outset. Okay, so just one more example here on risk versus reward. Let's say you buy a stock at $30. You set your stop at $29. You set your target at 32. Right? It's the old risk 1 to make 2. Right? So what are your probabilities on risk 1 to make 2? All right, you have exactly 50% shot of heading up point or 50% shot of heading down a point. That's a coin flip. All right, assuming you have no edge or predictability, that is a coin flip. You could risk 1 and you're going to make 1. You could risk 1, you're going to lose 1. It's just a 50-50 shot, right? So already you're getting stopped out 50% of the time. Okay, if it heads down a point, you're stopped out, right? You risk 1, you had your stop 1 point below, you risk 1 to make 2, but half the time you're already getting stopped out. So the question is, can you get $2 before you draw down the $1 the other 50% of the time, right? And the answer is, you better hope you can, or else you're not going to make any money trading. Okay, but you don't know what that probability is, or do you? Remember the test we ran earlier with Apple. All right, we don't currently know the probability of that $2 move being hit. Right, we don't know how likely it is that we're going to get the $2 move up, right? But we do know our historical data because we ran a test on it, and we know the historical probability of the important levels to our strategy getting hit. All right, so here's a little historical probability of target table here. All right, so I believe I put this on Apple maybe like a week ago. All right, so if we started at 320, if we bought stock at 320, I actually have historical probabilities of all these other levels being hit. So if we start at 320 and go long on that bullish crossover, 75% of the time, we're going to hit 325. Okay, 72% of the time, we're going to hit 330. 65% of the time, we hit 335. About 50% of the time or so, we hit 350. All right, and this is all based on some option pricing stuff. So we can see in a cool little table as part of that tool, the exact probabilities of hitting some of these targets, which gives us enormous edge trading. All right, if we know what the probabilities are of landing in certain places and hitting certain levels historically, that's a huge edge, right? So had we employed our strategy, we would have hit the target over half the time if we started at 320, if we used 320 as one of our key levels there. Okay, and in the strategy that we're going to talk about, we always shoot for one to 2 or better. So we're risking 1 to make 2 or better. Okay, so on the math here, if you just look at it, risk 1 to make 2 on a trade that wins 75% of the time. That's great. We're going to win 3 out of 4 trades. We're winning 2 every time, so that's winning 6. And then we're going to lose 1, right? We're winning 5. Basically, we're winning 5 net. We're winning 6, we're losing 1. We're winning 6, we're losing 1. We're winning 6, we're losing 1. That's a great expectancy, and that's a great trading formula for success. Okay, so back to that stock trade for just a moment. We know we got a 50% chance of getting stopped out, and the question was, can you get the $2 before you draw down the dollar the other half the time? Okay, and here's the cool things about options markets. Okay, if you haven't traded options before, it can be a little scary, I know, but we're going to take a look at an options chain for just a minute, because the options market is constantly predicting forward movement. That's all it does. It predicts forward movement. It says, hey, if we're at 30 bucks, what is the likelihood that we hit 31 in 5 days? Like, what is the likelihood that we hit 42 in 37 days? It's a gigantic market of forward projection rather. Okay, so here is a screenshot of Twitter. It was trading at 30 bucks at the time. All right, and there's a lot going on the screen, so hang with me for a second. So we can see a category called, or a column called probability of touch. All right, and what this means is that Twitter, currently trading at roughly 30 here, has a 44% chance of touching 32. Now, why is that important? It's because 32 was your profit target level. And what was your stop loss? It was 29. Right? What's the probability of getting stopped out? 71%. What's the probability of hitting your target? 44%. Okay, so risk 1 to make 2 all of a sudden with a stock trade does not look that attractive anymore. Okay, I'm going to pause here for just a moment, and this is important. Let's let it sink in for just a moment. Are we clear? Do we know what this means? The probability of getting stopped out is 71.5%. The probability of hitting your target is 44%. Okay, that's what this amounts to, and the options market can tell us, with a very high degree of confidence, what those forward projections look like. This is millions upon millions of dollars pouring into these trades, making bets on future movement. Okay, it's a really important thing to understand. Okay, so now let's talk about risk reward for just a moment. So in that Twitter example, by the way, this is the Risk. If you've never played Risk, it's the game of world domination. And then here's a $600 reward poster from 1859. Interestingly, though, I ran the numbers on this, and just for fun, throw it into the chat. What do you think 600 bucks back in 1859 is worth today? I'll tell you in a minute. Throw it into chat. Tell me what you think it would be worth, because I was not even close. So go back to our stock example here. The probability of hitting the stop price of 29 bucks was 71%, and the probability of hitting the target price of $32 was only 44%. So even though it seems like it's a good bet, sometimes it's not, right? If you have a 71% chance of getting stopped out and a 44% chance of hitting the target, how do you feel about taking that trade? Do you feel good about taking that trade? Some people psychologically don't mind getting stopped out of trades 71% of the time as long as they're winning enough on the other, but I can't trade that way. I can't do it. All right, some answers coming in here. Someone says 10,000. Al says 58,000. John saying 20,000. And Halstead taking home grand prize here with $2.5 million. So fun fact, it was actually around, I believe it was around $18,000. I would have thought it would have been so much higher. But yeah, about 18,000 bucks. And this is a really hilarious warrant poster that unfortunately I can't read. It's too small, but the descriptions of the two gentlemen were pretty funny. All right, so now we can use strategy to start mitigating risk, right? We talked about mitigating risk and how important it is, because this is the thing that will kill your account. So now we're going to talk about using some strategy to mitigate your risk. All right, so how do you minimize risk and maximize your returns while working within the constructs of your probabilities? And that's a complicated sentence, but there's really 3 very key points here. Let's see if I can make my pen work. I always forget how to do it. It's not that, it's not that. It's not that, it's not any of those things. All right, so there's risk, there's return, and there's probability. Okay, you could think of it as risk, reward, and probability. Once you have those 3 pieces of information, you can basically do whatever you want and win you can win, right? You can have a winning system if you know those three pieces of information. Okay, and using a strategy involving options allows us to dial in risk and dial in return to to the nth degree. Basically, we can do it as granular as we like. Okay, so all we need is the probabilities, and we can set up a winning trade system. So I'm going to teach you a strategy that overcomes the high probability of being stopped out. You can use options for that. It defines your risk, right? If you're trading stock, your stock can go to zero. That's a lot of risk. Okay, the third thing it does is provide a considerable payout on risk. All right, and uses a small fraction of your buying power. So we're actually doing a much more capital efficient strategy by using this, and it does not require buying or selling the stock. Right, we're never going to buy or sell the stock using this strategy. Okay, so enter the Black Book spread. Right, the Black Book is Nevada's directory of players who are banned from entering casinos. Now, I don't know why they're banned. I didn't do that much research on the Black Book here, so I'm gonna pretend. I'm going to concoct my own little fantasy here and say that it was because they were so good at gambling that they were killing the house's business model. I don't know. Maybe they're card counters, whatever they are. So we're going to go under the assumption that they were just really good and they were killing all the profit margin on the casino. All right, but maybe that's not the case. I don't know. So what we're going to do is learn this Black Book spread, and it's going to limit your risk to pennies and allow for reward in the dollars. Right, so very little risk, very high reward. Okay, so that's what we have going. Little risk, high reward. Okay, it's fully tweakable. We already talked about that. You can basically put on whatever risk and reward you want, and your probabilities are going to come from that historical data set that we have. And yes, it is an options trade, but don't be alarmed. Don't be alarmed. Okay. And all the options traders are now currently furiously Googling, trying to look up a Black Book spread to try to find out what it is. Okay. If you're anything like me, you're already on the Googles. You're like, Black Book spread. What is that? Is it a Christmas tree spread? Is it a vertical? Is it some kind of weird broken wing condor? It's none of those things. All right. What it is, it's the spread that makes the most sense given the data we have. Okay. So if you have a stock that is a super slow mover, maybe like a utility stock or something like that, or something with like super low, what we call implied volatility, that's basically a forward projection of how much it's going to move. If we have something that's not projected to move at all, then maybe a long, slightly in the money option would be appropriate. And again, if you haven't traded options, some of this stuff is going to be a little jargony for you. We're very good at hand holding. We're very good at teaching and breaking stuff down. So hang with me for this part. All right, if we have a large mover with a lot of implied volatility, with a very jacked up implied volatility, then we might be using another kind of spread, butterfly, broken wing spread. And a vertical might be more appropriate in some cases. So this slide's really more for the options traders that are familiar with this kind of thing. So a Black Book spread is just the most efficient spread for whatever that inefficiency is. So when we find our inefficiency, it's just the best way to capture it. Okay. I've lost the chat. Everyone's talking about the $600 now. Yeah, there's many folks chatting in to tell me exactly how much $600 is worth in 2020 now. Okay, so Black Book spread types. They might be any of the following. They could be vertical spreads. They could be butterfly spreads. They could be iron condors and flies. They could be long options. They can be broken wing trades. And again, if you're not an options trader already, just ignore all these things for now. Don't worry about them. Point being that they're gonna look like a variety of different things depending on the trading environment we're in. Okay, and I should sidebar here and just mention, as a retail trader one time, there's so many services that will apply the same tool to 15 different market environments, and it just doesn't work. Right? You can't use the same spread, the same trade in every environment. It's not going to work. All right, it's just not going to work. So you've got to have some variability in your trading. You've got to have many different tools to get the job done depending on what environment you're in. Okay. Sorry, there's a comment that's pretty funny. Okay, so Black Book spread example. So we're going to use Apple as our example, since before we established via our data that it is a solid bullish candidate, right? So we're going to put on a trade that can't be stopped out until 30 days have gone by, meaning if we hit that stop, which we've already established, if we do a risk 1 to make 3 kind of stock trade, we're going to hit it 75% of the time. All right, so in our case, we're going to risk $1.25 to make $3.75. We're going to risk 1 to make 3, which already looks pretty attractive. Okay, and if we go to the options chain, we can see that we have a 33% chance of winning the trade. Okay, that implies risk 2 to make 1. All right, that means 66% of the time we're going to lose the trade, and 1/3 of the time we're going to win the trade. Okay, and we actually, if you do that trade 1,000,000 times, you're going to win. You're going to win a lot of money, and people are going to write books about you. All right, you're risking 2 to make 1 on the implied, but you're actually risking 1 to make 3 in reality here. Okay, so the options chain tells us one thing. The forward implied probability tells us one thing. So the math in the moment tells us one thing, but our historical data tells us a very different thing. And our job is to capture that inefficiency. Okay. This is another part of the tool. So this is the exact heat map of all the spreads that pay out the best. Now this is kind of a confusing shot here, but if we start at 320 and try to trade up to 360, this is the expectancy. That's how much we would expect to make per spread, right? Per trade. 140% looks pretty good. I'll take that any day of the week. And then you can see the numbers go all the way up to 260% here. With a trade like this, you're going to win less often, but you're going to win big when you win. Right? With a trade like this, you're going to win more often, but you're going to win slightly less. Right? 84%. Who's gonna be upset about an 84% profit? Not me. I'll take the 84% with the higher probability. And then we also have a table in the tool that shows us the probabilistic edge, meaning that maybe the market is showing us that we have a 20% chance of winning this trade, but our stats say we've got a 50% chance of winning the trade, so we have some edge in the probabilities there also. So we have a couple different metric pieces you can look at to kind of determine what the best trade is. And don't worry if this is confusing now. It's just part of the tool. Just one more thing in the mix that will help you make the right decision. Okay. All right. So here's another part of our tool. All right. So this is just a different trigger this time. So instead of using a moving average cross, we're using a Bollinger Band. Anyone here trade with Bollinger Bands? Anybody here use Bollinger Bands? Now the working theory in all the books you've ever read is if the price goes above the Bollinger Band, which is basically just a little volatility band, it says, hey, price should stay within these two things most of the time. So if price goes above the Bollinger Band, theory says, oh, it'll come back in. It'll come back in. But what we can do is we can look at the historical data. This is from Microsoft in this case. And the stats show that if we jump outside that upper Bollinger Band, we should fade the trade until it closes back below the midline, but we should limit our losers, right? So if we go back here, here's the upper break of our Bollinger Band. If we held it until we closed back in the middle, then we have a winning trade statistically, but we have big losers. So we would want to come up with a trade that limits the losers and can take advantage of the high win rate. Okay, so again, if you're trading without data like this, it's tough. Like, where do you cut your losses? Where do you take your winners? But setting a trade up when you know this stuff, and this is 70 occurrences, we got a decent data set. You can make a much smarter, much more informed trading decision. Okay, so it's much more quantitative. So our stats show that we should limit the losers. All right, and this is a perfect example of what we're doing when we place these trades. In this case, the average winner is a 4% move in 10 days, but we're likely to take $2 worth of pain to get there, right? But we can come in and use options for the win, take the $2 in pain, let the trade win its 4%, and go on our way and not get stopped out. Okay, and this is why you need it, right? It gives time for your trade to work without having that risk of stopping out. You can stop out a million times over and not actually get stopped out. The trade reverses in your favor, you're good to go. All right, and then you have the defined risk and reward and probability. It's all you need. Those three things are all you need to be profitable trading. People are always chasing that dragon of like, what's the strategy? What's the next big thing? You just have to get these three things right. That's all you have to get right. The risk, the reward, and the probability. If you can get those three things nailed down, you are good as gold. Okay. The other things, again, tiny capital requirement. You don't need much capital to do this relative to the underlying symbols. You can trade Amazon with this thing with a small account. You can trade massive moving stocks with a very small account. Okay, and when you combine it with the directional edge, it has tremendous growth potential. Okay, tremendous, huge. Okay, so I just said this, but again, it allows you to trade huge products with tiny risk. What's a huge product you would like to be able to trade that you can't trade because of your account size? Right? Do you want to trade Amazon, but you only can buy a couple of shares? And I mean, it's fine. It is what it is. It's a almost $2,000 product. What are you going to do? Come in there and throw 100 shares at it? That's it's $200,000 just to do a round lot of shares on Amazon. That's a lot of money to throw around for one trade. But this spread allows you to trade those big products, with a tiny amount of risk. Right? People saying Google, Amazon, the SPOOs, other names out there. I put Tesla in here. This is Nikola Tesla. And there's the Tesla. I was going to find a picture of the truck, but I couldn't find a big one. Couldn't find a good picture. Right? So we're trading Tesla in this example. It happens to be a butterfly in this case. And it's a 55-cent trade. You get 55 cents at risk on this trade. That's it. 55 cents. Tesla is now an $8,000 stock. No, I'm kidding. It's almost an $800 stock, which is staggering to me. But we can trade that massive stock, which I think in reality is actually around $550 for 55 cents. That's it, 55 cents. Okay, just to throw it out there, options do work on a multiple of 100. So the actual risk in this trade is $55. Someone saying a third grader could have drawn the truck. That's true. It's all just very simple angles, isn't it? So here's some live examples of the black book spreads that we have done. Okay, if you're not familiar with it, this is the Thinkorswim platform, right? These are just screenshots from the Thinkorswim platform. So this is the date we placed the trade here on December 23rd. We closed it on January the 3rd, 2020. This one happened to be a vertical spread. We put 49 cents at risk. We closed the trade for $1.06 in, I don't have my days on this one. This was, 8 days plus 3, so 11 days in the trade. We made 116% return. Okay, here's another one. This one happens to be an iron condor. All right, this is 3M, which we opened with a $3.64 credit. In our case, that was $1.34 at risk. And we closed it for a $2.44 debit. So this is like a short stock trade if you want to compare it to shorting. We opened it for a credit, closed it for a debit. So in this case, we made $120 in 2 weeks, or a 90% return on our risk. All right, here's another example. This one is another iron condor that we actually just did on Netflix as an earnings play. So we only had 9 cents at risk in this trade. This was a tiny, tiny, tiny trade. And we closed it for a gain of 15 cents, which again does not sound like much, but it's actually 167%. And that one took a week. Okay, so how would you like to only put 9 cents at risk on a trade and make 167%? And I should point out also, you don't have to just do one contract, right? If you want to put $900 at risk or $9,000 at risk in this trade, you can do it, right? The return percentage is going to be the same. Okay. All right, Gilead. This one we opened for a 65-cent debit, right? $65 at risk, and we closed it for a 91-cent credit. So 26 cents, 40% in just 2 weeks. Okay, here's another one, and I'm pulling these all from live accounts. So, these were trades done in front of thousands of people. So no paper trades here. So this one was McDonald's. This was just a single option, so no spreads here at all. We opened it for $1.69 debit, so $169 at risk, or $1.69 options terms, and we closed it for an $8.65 credit, which is a gain of 512%. And I want to clarify, this is not normal. This is an outsized return. Okay, this is a tail event return. Took 23 days to get there, but it was absolutely the return. Here's the opening order for $1.69. Here's the closing order for $8.65. This one I scaled out of. So you can see I put 2 orders in to buy them and scaled out of them in a few pieces. So one came off at $3.65, one came off at $6.40, and the last one came off at $8.65. Okay. Splunk, my least favorite name of a ticker ever. We opened this one for $1.10, so $110 at risk, closed it for $1.57, which is 43%. And this one, I should point out, this one only took 2 days. Right, it's a butterfly, $1.10, closed it for $1.57 in 2 days, people. 43% in 2 days. All right, I've got a couple more. I want to show you. Delta Airlines. This was another single option. We bought it for $1.94. We closed it for $3.94. And you can see the expirations in here. There's a couple people asking about expirations here. The expirations are going to vary. We'll talk about that a little bit here in a minute. The strike prices are going to vary. There's a lot of variables in the trade. So I've already mentioned we're picking the most appropriate strategy given the market environment. So all these variables are going to change a little bit. Okay. This one was on General Mills. Opened it for 49 cents, closed it for 70 cents. So 43%, 12 days that one took. Here's another vertical spread on Pfizer. Opened for 53, closed for 98. So that was 85%, 10 days. Square, we opened for $1.37, closed for $3.97. That was 117%. That one did take a little longer at 25 days. But again, who's complaining about 117% in 25 days? And, we do this kind of thing and people say, cool, you're just showing your winners. What about your losers? Do you ever lose trades? Of course we lose trades. Anyone that tells you they don't lose trades is, selling you snake oil. That's all there is to it. Everyone loses trades. We all lose trades. So I'm showing you some nice winners. There are also losers in there. Okay, I don't want to be disingenuous. There are plenty of losers and there are plenty of winners. Okay. And again, just to mention, this is not funny money. These are live trades. We go on every day live for about an hour. The instructors at TheoTrade, and so I executed these live in front of thousands of people. It's not a paper trade. It's not funny money. And the other thing I want to point out is that there's no urgency. So if anyone else is taking these trades with me, there's no urgency. These things can be, these trades can be placed in the morning or in the afternoon or anytime during the trading days. So they're relatively short-dated swing trades. If you know what a swing trade is, it's just a trade where you are, you're in the trade for, anywhere from like a week to a few weeks, maybe a month or two, kind of a medium-dated trade. So it's not like a long-term investment. It's not a day trade. It's a swing trade. It's in the middle. Okay, and if you have no time, that's no problem. All right, I just mentioned it, but there's no urgency on the trade. So you can enter these things and exit them without even being at the computer. And this is super attractive to a lot of people, right? I know a lot of you guys have jobs. You don't want to be sitting in front of your screen. You can't be, jumping onto a trading platform in the middle of the trading day and, trying to place trades while you're working. So these things, you can enter them at 5 a.m. in the morning, 3 hours before the market opens, and it's fine. Okay, you can open them at night. You can't open them at night. You can put your order in at night and just let it rest there. And if it fills the next day, great. Right? So you can place all these trades in about 5 minutes at any point in the day. Okay, if you don't like mathy stuff, this is the Enigma machine. This was the machine they used to crack the codes in World War II. So I've created that tool. I've already mentioned it a couple times, but I have a tool that's super easy to use that does all that heavy lifting for you, spits out the numbers you need, and it'll even pick the spread for you. So it's a fairly dummy-proof tool, and it's one of the cooler things I've managed to build. I like building stuff. I'm a little bit of an Excel nerd, so I do build stuff. And Lawrence over here is actually distilling it down quite nicely. So you invent a system, you analyze the stats, and you build a spread around the stats. That's it. Yep, that's it. You got to get your stats right, you got to have your system right, and you got to know what strategy to use. So you got to understand volatility and a few other things to, to make best use of the data that you have. Okay, so some characteristics. Again, the risk-reward probabilities can stack massively in your favor. All right, you got tiny capital requirements. You can do this with as little as 9 cents. Just showed you that Netflix trade. You've got defined reward, and some of them actually have unlimited reward. So that McDonald's trade I showed, we could have held that one longer and probably actually done a little better on it. So some of them offer unlimited reward relative to pretty tiny risk. And then again, you get to define that risk. It's not like a stock. You don't have gap risk. You can dial in your precise risk number. These are good to cancel order types, so you don't have to be in front of the screen. We talked about that. The time frame on these things is your choice. So the trading tool I built has any number of time frames. So if you want to hold something for 2 months, that's great. If you want to hold it for 2 days, that's also fine. We can run the numbers on whatever time frame you want to run them on. In fact, it also runs on intraday. So if you're an intraday trader scalper, then you can quickly run numbers on an intraday trade. Try and be in and out within an hour or two. Okay, probability of profit is also adjustable to your preference. If you want to take trades that pay out 80% of the time, then you can take those trades. If you want to take trades that pay out 10% of the time, but for a much larger payout, you can take that. So you can actually adjust your probability of profit to your preference. Some people like to take high probability of trades and don't mind eating it every now and again. And some people don't mind eating it all the time, but taking really, really, really high shots and occasionally, scoring lottos, basically. Okay, last thing, this can and absolutely should be used to hedge a stock portfolio or retirement account. Okay, and then again, we have that tool for you that's pretty dummy proof, and just due to the nature of the way the trade works, you can grow a small account really quickly. For example, this one, so an Amazon trade, we placed it for $2. That's a tooth, while in this case, it's like an $1,800 product. You can put $2 at risk, right? That's a $200 trade. That's it. You don't have to put up 200,000 bucks. You can put up 200 bucks and trade Amazon. Okay. And, it's worth mentioning, I've used the One Ring here as my example. Anybody know the One Ring? Lord of the Rings fans? So if you use the One Ring correctly, you bring peace and prosperity to all of Middle Earth, right? And used incorrectly, you'll destroy mankind and elf kind and dwarf kind. All right. Of course, those are proxies for your world and your trading account. So you got to be careful with these things. You got to allocate the right way. You can't go willy-nilly, gunslinging here. All right, this is the most offensive picture I could find for this particular slide. This is a fish pie, which apparently is a thing somewhere in the world. It's really terrible. I can't even look at it. So basically, where we're going is we don't want to let you don't want options to intimidate you. They don't have to intimidate you. All right, you need these things for the future of the market. So yesterday was a great example, right? Yesterday, very volatile day in the market. Today, very volatile day in the market. Hard down yesterday, hard up today. And, the trading account that I use these spreads in was up both days. Right? It can handle big down moves and big up moves. All right. We have a nice little recipe for you to build these spreads. And here's what I went with. You wouldn't try to recreate my grandmother's famous fish pie without a recipe. Just to be clear, my grandmother does not have a famous fish pie. That's just a joke. But why would you trade without a recipe? If you're trying to make something, make a cake, make some muffins, make a fish pie, you got to use a recipe, right? So why are you trading without a recipe? All right, so here's another example on ServiceNow. We opened it for 380, closed it for 905. This one took about a month, 133%. Huge winners with these things. Here's a win. Speaking of Vegas earlier, so open for 223, closed for 445. Big numbers. That's 100% in 25 days in that case. Another Iron Condor here. This one on UPS for a 307 credit to open, close for a debit. So this is just doing the trade in reverse. So we're collecting a credit up front in this case on the 23rd of December, little Christmas present, and then closing it by buying it back on the 10th of January. All right, so 57% on that one in 18 days. And then this is where we have to basically know what all the things are. So questions have been rolling in about all these variables, right? So what makes a viable black book spread candidate? And I just want to point out there are 4,862 optionable stocks in the universe of stocks. That means there are options on 4,862 different underlyings. Okay, roughly 200 of those are tradable for our system, and only about 50 of those are our preferred underlyings. So that's about 1% of the optionable stocks. So you need to know which stocks you can trade, right? You need to know what volatility you should look for. We haven't really seen any volatility in like the last 5 hours. We had again massive up move yesterday, massive up move today rather, and huge down move yesterday. Right. So what do you do when you're in heavy volatility? We have to tweak the strategy when we're in heavy volatility. You have to use a different tool in a different scenario. Okay. Again, anyone that tells you the same thing will work in any market condition, they're misinformed. Okay. What expiration do we select? You have to know what expiration you use. You have to avoid binary events. You have to know where to put your trade. Sometimes we want to put it really short dated. Sometimes we want to put it really long dated. So you got to know which expiration to use, which delta of the option to buy. Do we buy the at the money delta? Do we buy slightly out of the money delta? Do we buy in the money delta? Right, that can be the difference between a little bit of profit, a total home run, and a loss. Right, so you got to buy the right delta. What options do I sell against my position? If we're doing a spread, where do we sell the option? Do we sell the at the money, out of the money, in the money? How far do we take it? Basically, all those things. How do I actually build the trade? right? What pieces do I need to build the trade? What variables do I need to look at? What do I actually do with my order ticket? If you've never traded an option before in your life, then we can help you actually put the trade together. We will hold hands, people. We will help you put this thing together. Right? And this one is super, super, super important. Allocation, allocation, allocation. I talked about it earlier. This is the thing that will kill your account. What is the right amount of risk for me? Okay, for you, what is the right amount of risk? How much do we actually put at risk on a given trade? Okay, so let me show you exactly what we do here at TheoTrade.
Yeah, excellent. And I hope you don't mind. I'm going to chime in on this one, Matt. And it's
Sure.
probably the most important thing that, we've really created here at TheoTrade, and we build recipes for trading. And what that breaks down to, just like Matt said a moment ago, is like a recipe for a fish pie. I got to tell you, Matt, that was unusual. Let's put unusual in, quotations there, unusual. But I always think of like, we talk about like recipes and trading, and we're talking specifically about black book trades. It's what do you say, a checklist? It's like a pre-flight checklist. You hop into a cockpit. Nobody turns the key to a Boeing 737 Max. Well, of course, nobody turns the key to that now at all. But nobody turns a key and takes off in an airplane. There are like highly detailed checklists, and it's one of the most important things that you guys have to understand about trading. People always say, if you don't have a plan to fail. Listen, okay, push aside the idea of like, the trading game plans and so forth. What it really comes down to trading, it's about answering the what ifs. All right. Anybody can go out there, you can find your trade and so forth, but you got to know what is a good, stock ETF candidate for a black book spread. What's the correct options expiration cycles? One of the questions that just came into the chat room a moment ago. Like, well, what's the expiration cycle, for a black book spread? How much capital do I commit? A moment ago, Matt just said, allocation. Now, allocation, okay, is more important than being right in the marketplace. Doesn't matter if you're right in the marketplace, okay? Because sooner or later, you're going to be wrong. And if you're going to be wrong and you're over allocated, how do you think your account's going to look? I mean, what strike price options? I don't know if a lot of people have looked at option chains. Maybe you haven't. But there's a lot of options out there. I mean, you open up an option chain on something like Google, that's intimidating. And growing a small account, what should that allocation be? Outside of just, how much capital should I commit? If you're going to grow accounts, okay, and kind of parlay capital forward, you have to know incrementally. You don't trade a $2,000 account like you trade a $10,000 account, like you trade a $100,000 account. Trading and capital allocation is not linear. So when you're thinking about trading, it's all about answering the what ifs, okay? And TheoTrade has those answers. Again, what we do here is we build recipes. It's just definitive criteria, checklists for each strategy, each unique variable that you're going to encounter. We talk about different variables. What if the market goes up? What if the market goes down? What if it stays flat? What if there's a dividend approaching? There's expiration coming? Oh my! I mean, again, it's all about answering, okay, those questions. What's the right probability for my trade? You have to understand with these black book spreads, what Matt has built, okay, and what I have actually helped him further refine is this criteria. The right probability for the trade. How many option contracts do I trade for the account size? When do I close my black book spread? What if the stock sells off big? What's the correct return for the strategy? What if the market rallies massively? Can I fix a losing trade? It's how, it's when, it's why, at what price. It's just the beginning of variables that you're going to face while opening a black book spread. Okay. And I know, and Matt was saying this a moment ago, and I actually completely appreciate this comment. Everybody's out there, they're Googling. In fact, somebody even typed into the chat, they're like, I'm Googling what a black book spread is. Listen, you can read, okay, what a spread is. There's nothing though that's going to tell you what a black book spread is. This is a methodology. This is a criteria. This is a checklist. Okay. You can go out, you can Google, you can figure that out. Again, maybe you already know how to build a couple of different option spreads. Maybe you don't. That's okay. Okay. It's critically important. You need some recipe for success. And what we've actually done, okay, specifically here is myself, Don Kaufman, Matt Williamson. I say experience matters. combined over 35 years of trading experience. I personally had access to client order flow for over 15 years. I've viewed and studied millions of trading accounts. The way that we actually build our criteria, okay, one portion of it is regression analysis, meaning that, yeah, you can go back, you can back test stuff. I'm not big into back testing, okay? I believe capital at risk is the way, okay, to actually vet trades. But on top of that, when I say capital at risk, literally going out and trading, okay, doing what? Thousands and thousands of trades over time. I started trading in the late 90s. Matt started a few years after me, okay? We're not too far off in age. One of the other aspects that we bring to the table, okay, is we viewed and studied millions of trading accounts. What I did at TD Ameritrade, I ran education there for 15 years with the largest option order flow, and we studied order flow, and we studied what everybody, okay, was doing at the firm, meaning all of you. So if you think there are literally billions of dollars at risk, okay, you do regression analysis on that to arrive at what? Criteria. And criteria, it's your recipe for success, okay? The following strategy, okay, these black book trades and the corresponding criteria requires the utmost attention to detail. And we spent literally years fine-tuning this particular trade. You know, the black book trade specifically, when Matt first came to TheoTrade, we've been working on this pretty much since day one. And ultimately, it comes down to following the steps to be able to build a trade. Matt is going to be doing a live class. It's growing a small account with black book spreads. Okay, that class is going to be live on February 6th. We are going to do it during a trading session, 10 a.m. to 2 p.m. Central Time. The class slide deck that includes all the entry and exit criteria, that checklist is available, okay, the morning of February 6th. We'll actually distribute the checklist to all, okay, on February 6th. Course is archived with 24/7 access. Now, again, this live course, it's during a trading day. A couple people are like, maybe you work, maybe you don't work, okay? But maybe you do work, maybe you have something going on that day. We archive it. And we give you then accessibility to our mobile applications for iOS and Android. You can download it, you can play it back, okay? It will also include access, okay, to Matt's Edge Scraper tools, which are effectively going through, okay, and taking a specific trade opportunity, okay, running it through a series of Matt's spreadsheets and figuring out whether the trade has edge or does not have edge. This class, again, it is a 4-hour class and it will be taught live February 6th. The cost of it is $497. Now, we do have a bit of a bonus offer with that. Before I do get some of the bonus offers, I wanted to show you the curriculum, some of the key points that are going to be taught in the small account black book spreads course. First, learn to construct black book spreads. Easy to learn, easy to do, okay, easy to place. Edge mining. Okay, Matt's going to show you specifically where and how to find edge. Number 3, strategy selection. You know, somebody asked a question earlier, like, well, is it going to be this spread? Is it going to be this spread? Matt's going to show you, okay, precisely which strategy to use. Highly dependent upon volatility. Allocation models, okay? How much should you allocate and why should you allocate, okay? What Matt calls the seesaw, okay? How to keep your portfolio balanced. Now, the seesaw has a lot to do with up and down days, patches of volatility, like we're in just the last couple of trading sessions. It's actually a perfect time, you know, Matt, to talk about the black book spread because the seesaw is a critical portion of this. You know, we've seen a one-sided market since October, right? Every single day is up. Everybody feels like a genius. The last, 2-3 trading sessions, everybody's caught wrong-footed. It's actually why it's called the seesaw over here. Number 6, how to never lose sleep over your positions again. Listen, these things are going to be defined risk. Number 7, how to successfully navigate a variety of different market environments. Okay, the market isn't a one-way opportunity per se to the upside, no matter what the Fed does. Number 8, build your own black book spreads using a custom edge scraper tool. Just mentioned that a moment ago. Black book spreads, again, they are easily entered and exited with set it and forget it orders. What set and forget order types comes down to is what we term good till canceled orders. We don't want to leave you with the belief that you have to be glued to the computer screen throughout the course of the day. Our courses here at TheoTrade, okay, while building them, we're really mindful that, yes, some people are still working throughout the course of, a trading day, and you can't necessarily sit in front of the computer and execute. Okay. Well, for some of you that are retired, you want to leave for a portion of the day. Great. That's what set and forget order type is. Number 10, black book spreads can be done with a trading account of $2,000. Now that's something that I want to dictate to you for a second. Yeah, you have to have $2,000. Okay. Why? That's not our rule. That's not a TD Ameritrade rule. That's not, an E-Trade rule. That's not a Charles Schwab rule. That's actually a FINRA rule. That's, the Financial Regulatory Board says you have to have $2,000 in there to be able to do that. Black book spreads can be done in retirement accounts. If you have a retirement account, an IRA, it's fine, done, no problem. I trade these things all the time. Minimal options experience. Don't worry about the options experience, okay? If you have absolutely no options experience, we're not going to throw you into a course on February 6th and be like, okay, swim, monkey, swim. That's not going to work. We're actually going to ramp you up, all right? And smaller accounts looking for large upside potential, it's phenomenal. That's why we throw listen, this is viable whether you have a $2,000 account or $2 million account. One thing that Matt did not mention, Matt's a very sizable trader. He's a very sizable trader. And what he's trading with on a day-to-day basis, he's doing, in most cases, 50, 100, plus contracts at a time. Listen, the final key I want to make and the key point over here, follow the recipe to build the trade. Follow the recipe to build the trade. What we do is literally step by step, just like you're seeing steps down here, step 1, step 2. Ironically, this is a 12-step over here. Now, that's, again, some of the key points, all right? Some of the curriculum for the course, again, that we are going to be doing. And I want to highlight this again, February 6th, 10 a.m. to 2 p.m. Now, everybody asks about this. You want a bonus. Listen, TheoTrade. We built TheoTrade. We really wanted to differentiate TheoTrade from anything and everything, that's really available to you, as a retail client. When I say retail client, that's not negative. You're not a market maker. Probably not a market maker, although we do have a couple of professional traders that are absolutely clientele of TheoTrade, but we wanted to differentiate it, We want to go beyond just one class. I need you guys to understand, the Black Book has a lot of different strategies, and you can use a couple of different indicators, but TheoTrade goes beyond that one class or indicator. People want everything. We get that. You want everything to trade. You want everything to invest. You want all the indicators. You want it at one place, and you want it at one price. Let me show you the first bonus. Bonus number 1. We're going to give you access to over 88 trading classes. Listen, TheoTrade, we launched it actually early 2016. So I exited TD Ameritrade in mid 2015. We built TheoTrade and launched it in early 2016. The reason I mentioned 2016, because we're going to give you access to every course that we have done here at TheoTrade since inception. How many courses are there? There's 88 full-length trading classes. Let me give you just a few of those. Growing a small account with Black Book spreads. Now that class is going to be included, right? That class is included in bonus, obviously, number 1. I mean, you're going out there and you're going to pay $497 if you just want to go to growing a small account with Black Book spreads class. That's fine. In addition to this class, we're also going to give you, everything else that we've done. We're going to give you available immediately, tonight, now, All of these are going to be on demand. Now, obviously, the Black Book spreads class hasn't happened yet. It's going to happen February 6th. It's not on demand yet because, Matt's going to go live on February 6th. All of the other classes, though, are on demand. TheoTrade Mobile, you can download them. Guide to Small Account Growth with In-Out Spreads. That's actually a class that I personally did. It's a $497 class. We include it, How to Collect Income Being Short. It's actually another one of my class. The next, Big Short, the Risk Twist Spread class, Guide to Selling High Probabilities, Iron Up, Sell Premium, Minimize Risk, Survive and Thrive in Extreme Volatility, Day Trading NASDAQ class. That's actually Tony Rego. Covered Calls, right? Essential Skills for Consistency in, trading class, the Top 10 Skills for Growing a Small Account, Pairs Trading. This is just a quick glance at some of the classes. We have 88 classes in total. When these classes came out, right? We could sell them what? 497, 497, 150, 497. It's over $9,000 in classes. Why do we do that? Because we hate this nickel and dime garbage that everybody does in this industry. Here's a class for 497. Come on, come on. Now you have to pay $1,000 to get an indicator. Now you got to pay this. Listen, the classes that we offer, there's 88 trading classes. It's not me, Don Kaufman, doing all the classes. It's not Matt Williamson doing all the classes, not just the two of us, okay? Introduce you to the TheoTrade instructors. I am Don Kaufman, lead strategist, okay? I've been around trading education in this business. I actually grew up around option traders and started trading in the late 90s before I was invited to the startup Thinkorswim. Matt Williamson, he's our market neutral and premium selling options strategist. That's who you heard from a little bit tonight. Then we actually move on to Jeff Bierman. Jeff Bierman, give credit where credit's due. First of all, Jeff's actually a professor of finance at Loyola in Chicago. So if you would like to hear Jeff Bierman, he's $42,000 a year at Loyola, or you can actually grab him here at TheoTrade. He was also the chief market technician for TD Ameritrade. If you've ever been on the Thinkorswim charts, Jeff hand-built over half of the technical studies on the Thinkorswim charts. Next, we have Corey Rosenblum, senior strategist and a resident swing trader. Brandon Chapman. Brandon also worked with us at TD Ameritrade. He's a macroeconomics geeks, technicals, fundamentals, and CMT. Next on the list, Steve Slim Miller, 43-year veteran. I mean, Steve's been around since options have been around. I'm dead serious about that. Slim actually traded, okay, before there were even puts. In the 1970s, when options are first traded, okay, he was down there. Before they even had puts, they only had calls. Last but definitely not least, we have our intraday, okay, and NASDAQ futures strategist. It's Tony Rago, okay. This is where 88 courses come from over the last, 4+ years. Bonus number 2. If that's not enough, and again, 88 classes. I'm going to show you some of the classes in a moment from all of the different instructors here. And Matt doesn't just have the Black Book spread class coming up. Matt has actually hit upon about 6 classes already for us here at TheoTrade. Bonus number 2. We're going to give you an all-access TheoTrade VIP membership pass for free. What is it? For the most part, we just give you access, okay? Bear with me, to everything we do here at TheoTrade for the next 3 months. What's everything? Everything. We give you unlimited access for 3 months. We give you, and again, this is where people go, oh, am I going to have to pay for indicators? Am I going to have to pay for another class? Well, I just told you, give you 88 classes for free. Now we're actually going to give you a live trading chat room. We broadcast live for 6 hours a day. I know that you can't necessarily tune in for 6 hours a day. Some people absolutely do. On a given day, okay, we now have, okay, people rotating in the room, over 2,000 people a day in the chat room. Okay, we have over 4,000 people at TheoTrade currently. The traders throughout the course of the day, we provide real trade ideas, real-time market insights and analysis. We trade live throughout the course of the day. We also now email trade ideas. Actually, we text them out and we use push notifications. I'll change that. We text them out, use push notifications, including the Black Book spreads. We have 5 distinct trading portfolios. Whether you want to be an investor, whether you want to be a trader, whether you want to be very extreme, whether you want to be intraday, we have something for you. This is not a one-trick pony kind of shop over here. Like, it's a day trading. It's this. Okay, well, we have day traders. Okay, I'm an options geek, so I put positions on. Okay, we also have an investment portfolio. We have it all. Okay. Then we have daily coaching sessions with timely topics. This is continued education. We do it every single day. Stocks, options, and futures. And last, but definitely not least, and this one, got to highlight the most. We answer, okay, your trading questions via email or live in the chat room throughout the course of the day. That means if you're in trouble and you're in a trade and you need help, you can email us. You can email us and say, listen, I'm in this trade. What do you think of it? Or, okay, by the way, we have no problem with very direct questions. Do you like this trade? No, it's the worst trade I've ever seen. Why would you even consider that? Don't be offended by that. Hopefully that's going to save you. People are worried about, oh, I'm going to pay $497. It's $497 for 3 months. Okay. If you sent us just a couple of emails, maybe one email, do you realize one email, how much money you might be able to save? Okay. I think this is access to what? It's almost $1,000 plus more of support. It's not even $1,000. Okay. One email to save you on a trade or help you on some trade that isn't going your direction could be tens of thousands of dollars. And again, you have to put huge amount of weight into that because nobody does anything like this. On top of it, We give you access to 59 proprietary indicators and scans. Okay. As I said, it's everything. What are these? These are proprietary indicators: auto expected move, gravity points, the RSI Laguerre, Quantix, NQ levels, next generation squeezing indicator. We have a complex position tracker. Okay, that's actually from Matt. IV rank versus percentile, Theo Quant, unusual put options activity, sizzle index, SPX expected move, and a ton more. There's a ton of stuff. I'm just highlighting a couple. By the way, the auto expected move unto itself, okay, is the most complex script we have ever put together. It's the most complex, okay, proprietary indicator you've ever seen, and the amount it can do, okay, and yet the simplicity of using it, it's absolutely beautiful. There's 59 proprietary indicators over there. It's over $1,800 of indicators and scan. I mean, what we're trying to do here at TheoTrade is, again, when I say we try to differentiate ourselves, we include everything. Everything you need to invest, everything you need to trade. We have classes and coaching and email access to the instructors, live trading rooms. We have text messages being sent out to you, indicators and scans. We give you mobile access 24/7. Okay? Literally, we have an Android app. We have an iOS app. Everything you need to succeed. What we basically built here at TheoTrade is we built a Netflix for traders. Every genre of trade, okay, whether you want to be a day trader, a swing trader, and it just goes on and on. An options trader, we have it, and I'm going to show it to you here momentarily. Everything I included tonight, it's $297 for 3 months, okay? That includes, okay, Matt's live class. That includes, again, Matt's live class, because that question always comes up. It's growing a small account with Black Book spreads, okay? That course is included in all of this, and we give you literally 3 months, okay, including the live class for $297. Now you start, okay, now, meaning that you enroll for this now and you get rolling. Access to over 88 classes. So we give you, again, of course, the live class, which is February 6th, access to over 88 trading classes. All of those 88 classes, they're already in the can, right? They're ready. They're available immediately on demand. We say on demand, you stream them now. We even have a streaming device that can actually speed it up. So, if you want to cut a 3-hour class down to 2 hours, no problem, speed it up. Okay. We also have new monthly classes. I mean, that's what the February 6th class is. It's a new monthly class. Then we'll have another class in March, another class in April. Okay. And you'll be in access to all of them. You don't have to pay anymore for them because you're in here for the next 3 months. We have a live trading chat room, 6 hours a day, 59 indicators. Okay. Text messages. Okay. And 5 distinct portfolios, push notifications on trades. Like we're literally telling you our trades, daily coaching sessions. Instructors directly answer your trading questions through email. Okay. Go to this web address right now. It's theotrade.com/BB. That's boy. Theotrade.com/boy. BB stands for, it's Black Book. All right. So it's theotrade.com/ okay, boy. Now, okay, not done just yet. I want to kind of, make this even easier for individuals. Okay. One of the questions that inevitably comes up, all right, and it's already in here right now, is somebody says, what happens after the next, 3 months? First of all, $297. And I want to clarify this right now because the question's already flying into the chat rooms. Okay. $297 for 3 months. It's not a membership. We don't do that anymore. After 3 months, if you don't love it, you don't have to do it anymore. It's fine. We do not auto charge your card. This is not like, it's not a membership. Okay, so it's $297 is a one-time charge. What happens after 3 months if you love TheoTrade and want to continue? It's another $297. Okay, why do we do it this way? Because we're so sure you guys are going to love us after 3 months. Okay, we don't have to tie people into some, hey, it's $297 and then it goes up after that. Listen, it's $297. There's no contract. There's no rollover. We don't charge you again. It's $297 for 3 months. If you wanted to do it again after that 3 months, okay, tell us. Then it's another $297. Okay, and if you don't, hey, we'll still love you. And as I said a moment ago, to make this even easier, we're going to make it a riskless trade. TheoTrade, make it a completely riskless trade. Okay, now, everything you need to start trading from absolute novice to expert. What I'm going to show you when I say novice to expert, we have an entire area here in TheoTrade, okay, for absolute novice traders, people that have had absolutely no experience. And we're going to put a money back guarantee on it. You got to trade with us over the next 3 months. Okay, trade with us over the next 3 months. If you're not satisfied, now I'm not putting a number to that. You're like, am I going to make money? Am I going to do this? I don't care. If you're not satisfied, email support@theotrade.com. Provide us the detail of your trades. Okay, you do have to trade. Provide us the details of your trades. Okay, if you're not happy, receive a full refund. There's only a few stipulations on here, and I'm not getting like goofy with the stipulations. Okay, listen. Here's the medium print. A few stipulations. First of all, you got to do 10 trades. You have to do 10 trades using the Black Book Spreads criteria in the next 3 months. Easy enough? Okay. Listen, Matt will give you more than 10 trades in the next 3 months. We trade live. Okay. So follow a couple of his trades. If you're not satisfied, we get it. Email us. Your initial account value must exceed $2,000. That is a stipulation. Okay. The next one here, you must follow TheoTrade criteria for Black Book Spreads. That's the second time I put that in there because, listen, you got to make this fair. Because people will be like, I went out and I did nothing for 3 months. Yeah, if you do nothing, you know what your results are going to be? Crap, nothing. Okay. And if you do something and you actually follow the criteria, you're going to be pretty shocked. And that's why we do this. Listen, we put our money where our mouth is. Look, what do we care? If you're not happy, what are we going to do? We're going to give you back, okay, a whopping $297. It's only $297. Okay, we don't care. But by the way, these also have to be real trades. You have to provide real account statements of trades. This ain't paper trading, people. This is not a game. All right, we have money on the line. We have that $297 on the line. So you have to make it fair. Okay, fair for you, fair for us. We're fine with that. It's a completely riskless trade, and we will do that now. Okay, and I say get into TheoTrade now. We're going to work with you directly. Listen, 30 spots on the TheoTrade riskless trade deal. Matt, how many people could he possibly go through all the different trades and emails and so forth? That's why we're putting 30 spots on the TheoTrade riskless deal. There is one Matt Williamson, okay, and there were 1,000 of you. And it's important to us. It's a matter of trade size. Listen, we trade live. We give you unlimited email mentoring. We give 30 spots to the riskless deal, period. Okay. You can send us your trades. We'll actually pour through your trades. The $297 riskless offer. It's never been available before, on especially Black Book Spreads. Okay. Because we've never done the Black Book Spreads course. This thing is brand new course. Listen, a little bit about what our members are saying. All right. Thanks, TheoTrade. I'm up $4,000 this week. Aubrey W. Fantastic service. I became self-directed with my trading through the education I got here. It's James S. I just want to let you know, Don, how much I appreciate him and what he does. For the first time, my account is green. Here's everything, okay, that's kind of included. I just put this slide together so you guys would, again, kind of go through it. Today, it's $297. Again, it's completely riskless trade. As I'm actually taking you through this, go to theotrade.com/BB. I'll show you why here momentarily. Okay. It includes the guide to small account growth, okay, with Black Book Spreads. That course will be live on February 6th. If you can't make it live, it's fine. We archive it. How long does it take to archive? Okay. The second that Matt is done, you can be watching it. Right. In fact, we even have digital, video recorder technology, DVR. We're like TiVo for trading. You can rewind his course while the course is live, right? First bonus, all access pass. We give you 6 hours of trading a day, archived 24/7. Every word that we ever speak here at TheoTrade is archived. Every single word. Okay. We're going to text you out trade ideas, push notifications, trading indicators and scans, daily coaching sessions. The second thing, we give you over 88 classes: day trading, swing trading, technical trading, beginning options trading, advanced options trading, new monthly classes. Again, it's everything. Okay? As I said a moment ago, go to this site. It's theotrade.com/BB. And the reason I want to bring this to you is if you follow me to this link, okay, this is actually the link where we have the stock trade tracker tool. So I'm going to pop open here. Okay. And again, this is theotrade.com/BB, just to make sure everybody has that address correct. I'm going to pop it up here one more time. Theotrade.com/ it's boy. All right. /boy. Growing a small account. Okay. With Black Book Spreads. By the way, we're here to help you. If you have any questions, you can put your name, your email in there. You're good to go. All right, with Matt Williamson, again, there are currently 30 riskless spots left. Okay, 30 riskless spots left. Now, all right, you're going to attend the live class on Thursday, February 6th. And again, that's 10 a.m. to 2 p.m. Central Time. However, okay, this starts now. The second that you click pretty much add to cart, come in here, add to cart, it'll populate, all right, all of your information in here. Fantastic, good, done. After that, you'll get a username and a password. You have access, okay, to everything in TheoTrade. When I say everything, 88 classes, all the coaching sessions. What does TheoTrade even look like? All right, this is TheoTrade. This is actually the member site. And when you're in here, it says off air right now. This is the live room. This is actually where we broadcast. Down below is a chat room, okay? And you can talk to all of the other traders, all of the other clientele here at TheoTrade. Next, we actually come over to what we call our Start Here menu. Just a real quick glance, right, of everything that we offer here. Right here, this is the navigation menu. But right here, this is the Start Here menu. Why am I mentioning Start Here? Because somebody is a total novice. You've never traded an option before. Look, Options 101, okay? Part 1, Part 2. I actually taught, okay, all of these Options 101, 201, 301. All of these are introductory classes. But from there, you know, we kind of ramp it up. You want to see what our class archive looks like? Our class archive is broken down, okay, into options, option newbies, technical analysis, day trading classes, stock classes, futures classes, hedging, trend trading, mindset, okay, pairs trading. All right, let's go into option strategy classes. Do you think it's worth $297, okay, to have access to this? It's everything. These are just some of the option classes. Butterfly's Guide to Weekly Returns, Weekly Advantage, okay? You have 3 months. I told you it was the Netflix of traders. Is it overwhelming? Yeah. I mean, you go to a site, you pay $297. You want to be overwhelmed or underwhelmed, okay? And okay, we give you a riskless guarantee. You go out there, you do 10 trades. If you're not happy, we'll give you the $297 back. Okay, again, we're totally comfortable doing that. Guide to maximum edge trading earnings. And of course, you can watch all of these classes now to get ready, all right, for Matt's February 6th class. Other aspect, you're like, it looks like a lot on that site. That's right, it is a lot. You know, you can also search for different topics, okay? So you want to know like volume weighted. You want to search for implied volatility rank, options volume. If you name a genre of trading, if you name a topic, look at that. I just typed it in. This is like the Google, okay, for the entire finance world. Look at all these different sessions it pulled up. All right, what does it look like? Option oddities, tracking options volume and open interest. Okay, and there's like a 3-part session. Look, you click on it. Okay, you click on it. What does it look like? Right, you want to start streaming it? This is it. Okay. Live, okay? That's actually an archived course in there. All of it is available to you right here. Again, it's theotrade.com/BB. Now, as we mentioned, okay, there was the tool a moment ago, and somebody was he was like, what about that spread tracker tool? At the very bottom of this page, okay, the stock tracking tool is down below. That's a download for you. It's an Excel spreadsheet, okay? But right down there is the tool that we've, of course, promised you earlier this evening. If you cruise back up here, click Add to Cart. Everything included, obviously, here at TheoTrade is just detailed in this page, which, of course, I've gone over with you. Again, 30 riskless spots. That is it. And there's a number of people, obviously, enrolling as we speak about this. I'm going to answer a couple of questions, okay? And then I'm going to come back and answer a couple of more questions live. I think there's a few general questions that I want to get to first, and I like to get to these first, okay? One of the first ones that, you know, I always get, and again, these are just generalized questions. Go to theotrade.com/BB. I'm going to answer some of the questions from the chat room, some of these generalized questions first. People always say, what do you need to do this? I don't know, you need a laptop and internet connection. Listen, when it comes to trading, investing, absolute novice to the most extreme, okay? People get a little arrogant. Yeah, I've been around this business a while. I guarantee you have seen nothing like what we have here at TheoTrade, okay? I don't care if you spent $24,000 on an 18-month long course, okay? It's nothing compared to what we have here at TheoTrade. Not even close. Doesn't like light a candle to the amount of depth that we have here. Okay. We give you everything you need from the absolute novice to the most extreme. The second thing, I want to reiterate this again. This is not a membership. I call everybody a member, but it's not a membership. We will not auto renew or bill you again. If you want to continue with TheoTrade, you have to tell us, I want to continue at TheoTrade. Next, we archive, everything. What is everything? It's every single word we speak here. Okay, we understand not everyone can watch live trading throughout the trading session. We archive it. We give you access to TheoTrade Mobile. You can download the archives. You can email us anytime. You can receive a response within 24 hours, including trade-related questions. Yes, you can email us. And that's, when you're emailing us, a trader is responding to you. Right? We don't have, some child sitting in the office answering emails. We have traders, right? There's 7 full-time instructors, but then we have several people on our support staff. They are traders, okay, that actually help answer some of these email questions. Number 6, you will gain access to every course TheoTrade has done in the previous 4 years. We give you access to classes, to coaching, to live trading sessions. All the archives are searchable. Name a trading topic, and we've got an archive on it. Number 7, okay, all the trades can be done inside of an IRA or retirement account. You have to have as little as $2,000 in the account. So you could do this in a retirement account. In fact, I trade on a day-to-day basis now inside of my IRA. At TheoTrade, we can also help you get approved for options trading at several major brokers. People ask that all the time too. They're like, hey, I can't get an options account because my brokerage firm doesn't love me. Okay, well, they love us. And we'll make sure that you get approved for options trading. Keep in mind, 30 riskless trade spots are available, right? That means, and I say only 30, okay, more people can enroll for this, but only 30 of you are going to get that $297 money back guarantee. Get results, take action, enroll for TheoTrade. Okay, there's absolutely no risk in you doing so. It's theotrade.com/BB. One more quick, what our members are saying. By the way, you guys are rocking it. Very impressed. It's really refreshing to have you guys putting this together and sharing knowledge and not upselling everything and turning and burning your customer base. You've got a customer for life in me because of this approach. And I'm sure I'm not the only one. And I just love that one. So I wanted to throw that up there. Again, it's theotrade.com/BB. Let me answer some of the more of the generalized questions here from the chat room and make sure everybody's in there. theotrade.com/BB. Okay. All right. Matt, I'm going to try my best to also include Matt on a couple of these over here. By the way, I want to thank, there's a number of individuals enrolling right now. I'm going to butcher this first name. Tuulawaki. I know I butchered that from Texas. I know, I apologize right now. Okay, we're going to have to come up with an easier nickname for you. Daniel R. from California, Matthew M. from Iowa, Vincent J. from Minnesota, looks like Okert from Washington. I knew I was going to butcher that. He's typing in, how to pronounce the name. William from Texas, Al from California, Greg from Arkansas. Thank you guys. These are individuals that are popping in here and enrolling. By the way, all of you, as you enroll, you get to select. I just want to show you really quick. You get to select a nickname for the chat room. Okay. Some people use the real name. That's fine. Keith S., Brian, Ray. All right. I know all of these individuals. I mean, like, for instance, Brian over here. Brian's actually been in the chat room for 4 years. I mean, if long-standing relationships with a lot of these individuals. Indigo, okay, actually lives over in Singapore. It's awesome. So we've got people from all over the world in here as well. Malu. So I'm gonna suggest one of you possibly get an easier nickname so I do not butcher your name again, and I do apologize for that. Okay, a few more questions, and I think that I want to include Matt on here. Matt, are you with me over here? So
still with you.
Yeah. So one of the questions that came in. So you invented a system, okay? Analyze stats, build a spread, okay, around the stats. Is that fair to say? I mean, you're coming in here, you're building a system, analyzing stats and so forth. Is that fair to kind of the way you do it? Or, I mean, are you more comfortable going into detail over here and saying like, You're basically going to tell them how to do this rather than them building the system themselves.
Yeah, I mean, I think I interpreted that question as, hey, can I build my own system and do this? And yeah, you can if you have a few thousand hours at your disposal. Yeah, I mean, I guess if you want to do that, you can, but it takes a tremendous amount of time, energy, and effort. And I know a lot of people don't have that, and that's fine. So I've built it for you. I'll show you how to use it, and then I will, I'll feed you trades if you want, or you can, use that system to feed yourself trades.
Excellent, excellent. All right, I want to clarify that, but I also want to tell a couple individuals. Somebody actually said, I think it was Trevor said, he's just signed up, but no access yet. All right, you got to give it it's about 10 minutes before we give you access. It has to do with our security protocol. So it's about 10 minutes by the time you actually click and sign up before we actually send username and password. And it's actually just verifying, security on here. By the way, I want to thank Jane R. from Ohio. So actually, Trevor from New York. All right, I got to know where in New York, man. I'm a Long Islander. Port Jefferson. Jerry S. from Florida. Mark K. from Florida. Richard from Colorado. Tim from Iowa. Anyway, a couple more questions that are actually firing in over here. The other one that came in that I'm kind of interested in over here, Matt, and says it's from Leslie and said, "Are you using a scanner? Do you use a scanner a lot?"
I look out into the wide mountains of underlying. Yeah, no, I definitely use a scanner. I have to scan against, hundreds of stocks, and I can't eyeball them all. I'd lose my mind. So yeah, we definitely use a scanner.
All right. The next one actually popped in over here, and I'm going to help answer this one too. It says, how many trades, per month we expect from Matt? So one of the things is Matt will do trades. I will do trades. Corey will do trades. I mean, we're constantly trading. Specifically from Matt, Matt, would it be fair to say you're probably in a given month? I mean, how many trades do you show even in a given day? I mean, a
Yeah,
lot.
I show trades across a few different accounts. So for the small account, let me just look. I mean, I think I probably have on 30, between 20 and 30 in a given. I mean, maybe not quite that. I
And I
think I've
don't
got
want to
about 20
scare
on right now.
anybody. I don't want to scare anybody. Listen,
Yeah.
we trade a lot, and it's not just because we're like live. Okay, we're trading constantly. We have that ability to sit in front of the computer for 6.5, 7 hours a day, and you get to kind of pick and choose what you want to jump into. And I think a lot of it has to do when we're explaining these trades. Okay, we talk about them in terms of risk profiling, and you're going to find certain trades fit your, well, I don't even want to say style, your personality, and certain trades don't. I know Matt sometimes does higher risk kind of reward trades, and it really appeals to some individuals. And then me, I'm like extremely, extremely like risk averse, and that appeals to some people. You're going to find out. You just have to watch this a little bit on the archives. You're going to find out real quick who might appeal. And maybe, Matt, myself, and a lot of people, Corey appeals to a lot of people. And then we have Brandon, who is by far and away the most risk averse individual I've ever met. All right. He's trying to put a seatbelt on before he even gets into a vehicle. So again, it's your personality has a tremendous amount, of course, to do with this. All right. Moving on from there. Are Matt trades put on only the time he's live? Okay, or they're emailed and shot out. Yeah, so we're capable of putting on trades when Matt's live. But if he's putting on trades while he's live, we can shoot them in text message. We can shoot them through push notification. And yes, Matt is having a spreadsheet that you will actually see on TheoTrade. After the course, the Black Book Spreads class will actually have a spreadsheet. Okay, so we will again. And by the way, the spreadsheet for tonight, I want to reiterate that the spreadsheet for tonight, the stock tracking tool is down here. But yeah, after the course, Matt will have details on his trades and trade opportunities over there. And by the way, if you're interested on the site right now, if you take a look on the TheoTrade site, we have portfolios, duration portfolio, okay, Infinity Trader, in-out spreads. These are, this is some of the stuff that we're doing effective right now. The active one, okay, right now, just depending upon the volatility, the active one in here, The Infinity Trader is always active. In-out spreads is always active. Those are probably the most active of our spread types over there. So, all right, I know I'm running a little bit over time tonight, and I think I got the vast amount of the questions kind of answered, Matt. Again, everything that you're going to need for this particular course and all the background knowledge for it. If you have any difficulty getting started, shoot us an email. One of the most important things to know, I'm accessible. It's Don Kaufman. Matt's accessible. Tony's accessible. Corey's accessible. Jeff Bierman. All of us. We're an email away. And we encourage you, please do email us. All right. I want to thank everybody for joining us tonight. It's theotrade.com/BB. Shoot us an email to support@theotrade.com or hit us right here. Okay. We're here right now, so you can actually hit us for support if you have any follow-up questions from this evening's webcast. Thanks, everybody. Have a wonderful evening. Bye-bye.